back with the market right here on ET now in the thick of earnings, or I should say in the fag end of earnings. And let's address another set. We've got Kamada Prasad Seetharaman joining in, the CFO at Tech Wabag, to talk about how their earnings performance has been. Mr. Seetharaman, great to have you today on ET now. And I was just going through your numbers. Your revenue is surging 21%, adjusted EBITDA as well, uptick of 22%. Is the worst of the West Asia crisis behind us? Can one safely say that about your company?
Good morning, Aisha. Good morning to your viewers. Thank you very much for having us on your show. I think, yes, it's been a very good quarter to start the year with. As you said, 21% growth in top line and 37% growth in PAT, which is in line with our profitable growth mantra. EBITDA also grew, as you said, by 22%. So in all, it has been a very satisfying quarter, especially a very good quarter to start the year with. I think from a West Asia crisis part, we've always clearly said that the effect of the crisis on our business has been extremely minimal. We work in projects which are far away from some of these quote-unquote strike zones. Our business has been going on as usual. The progress has been there, which is also reflecting in the numbers. You can see that in this quarter, our ROW earnings were much higher than the India earnings. So in all, it's been on track. Yes, the crisis is there, but we as a management and a business will still have to find ways to run through it. We have had our effects, but we have also had our strategies to manage those. And we hope that we can carry on with this even through the rest of the quarters and the year.
So, just to understand the sensitivity to the Gulf situation right now, how much of your revenue, Mr. Seetharaman, comes from Gulf, Middle East region? And now with this region sort of normalizing further, how much incremental growth can we see in Q2 and Q3?
See, even in quarter one, if you see, more than 50% of the revenues came from outside India. And a major part of that is revenues from the Gulf, especially the project at Al Hayr and the Ras Tanura refinery. So I would say upwards of 30 to 40% comes from the Gulf region and partly from the Africa region. We also booked 2 new orders in this quarter. You can see one in Kuwait and one in Ajman. One was a mega order and one was a large order, which was also something which we announced during our year end, that we are a preferred bidder in orders in India as well as in the international geographies. So from an overall perspective, I think we are moving in the right direction. We are also watching what is happening, but water being an essential commodity when it comes especially to the Gulf. And what this crisis has also made it clear that building redundancies, reserves, and reserve capacities are more important. I think governments have been realizing. We are expecting that this will only be better in the quarters as we move forward. As far as our order book is concerned, we will have to execute them. So our ROW mix will certainly be higher than 50% as we go through this year. And we are confident on that front, Ash.
Mr. Seetharaman, you saw a significant increase in your order book positions. You are still maintaining a conservative 18 to 20% revenue growth for FY27?
I think we prefer to promise less and perform better. We promise what we are comfortable with, but as you said, the outcome, which is the revenue, is an outcome of the progress that we'll make. With the kind of order book we have, and also taking care of the geopolitical situation that is there, we've given this medium-term outlook. Of course, we are working on the next 5-year strategy, which we call as Vriddhi. We did a Vriddhi 1 on those objectives. We've already delivered. We gave a medium-term outlook. Now we are working on Vriddhi 2, which is for the next 5 years of growth. I'm sure by end of this year, when we make it public to all the investors, you will see, and I am confident that the guidance on revenue growth will be much better than what we have given in our medium-term outlook.
About the order book as well, Mr. Seetharaman, because that's rising substantially. Would you still maintain your conservative 18 to 20% revenue growth guidance, which of course you said that you want to maintain a conservative one? But the other point that the market is wondering is also that you entered the UAE market and forayed into Kuwait as well with a key SWRO project. What is the TAM in these regions, and what will be the strategy now to try and expand to these areas? Or in fact, I think the question should be whether you will now choose to expand or not, because these are sensitive zones now.
I think to call them sensitive zones is not the right way to look at it. These are zones which require water. Right? And it's important to understand that the Middle East is not only Saudi Arabia. There are more countries beyond it, and we have worked in Bahrain, we have worked in Oman, now we have forayed into Kuwait and UAE. All these regions have sometimes aging infrastructure, and also new urbanization, population growth requires new water infrastructure. Plus, the current crisis has only made it clear that they have to build these redundancies. We have already given the TAM when we met in the last quarter. It's a significantly big one, especially on desalination and reuse, and also the industrialization. We are already working on jobs in the Middle East and Africa market upwards of 1.5 to 2 billion at this point, cumulatively in various stages, whether it is RFP, whether it is a request for AOI, or whether it is a tender. Those are the kind of sizes that we are seeing in the Middle East and Africa region. And we really don't see, with the Saudi Expo 2030, the FIFA 2034, and also the multilateral funding that is going into the African markets, any sort of quote-unquote crisis will stop the growth of water requirement in this region. It is essential for their sustenance and also for their growth, whether it is population or it is industrialization. So the opportunity is extremely big, and we are well placed over there. We've been there for more than 4 decades, especially in the Middle East region, and much more in the African region. So we are very well placed. We have very good connects with the developers. We have wonderful connects with the multilateral funds. We have a working relationship with both of them. So it's only going to augur very well for Wabag as a brand and us to build larger and larger projects, which you have seen in the last 3-4 years. The size of projects have only been going up.
Good to hear that. And what about India? How has the government tendering been?
It has picked up. You can see that we've already won another order with DJB at Mitro, an order in Bairamangala and Bellandur in Bangalore, which is again a STP and a TTP order. We won a BPCL order last year. So things are opening up in India, whether it is wastewater or certain desalination opportunities that we are pursuing right now. The market has certainly started looking up after a few quarters of lull, which we saw earlier, where we focus more on the international markets. And what's heartening, in fact, is this quarter you would see that we have order intake from all the 3 clusters. We had orders in India, we had a couple of orders in the Middle East, especially country entries, and also our European market, where we booked an order after a long time, an advanced tech order. So from a start perspective, you can't ask for a better start to the year as we have performed in this quarter, whether it is order intake or results.
Seetharaman, are you seeing an increased tendering coming from the state governments? Of course, the central plans, plan is also there, but state government is something which, especially for many states which are going into elections next year, will you see increased tendering coming in?
See, it's obviously a factor that will drive tendering, but I want to re-emphasize our focus remains that we bid for orders only if there is a federal government funding, a sovereign guarantee, or a multilateral backing. We don't go for orders which are on the exchequer of the state. This is our stated policy, we try and minimize our exposure to such orders so that we don't have a problem of collection. It may be a administrative process which we have to go through when it comes to government in terms of the time taken, but never we should have a case of not being able to collect money. So robust payment securities are an important quality of the order book that we have today and orders that we pick. Yes, some of these state governments will tender out, but as long as it fits into the parameters that we have set, we will not shy away from going for those orders.
Are you seeing increased activity coming in from the private sector as well with respect to new age sectors like a semiconductor or the PV cells or data centers, AI, green hydrogen? Are these capex also bringing in orders for you?
I think if you look at sizes, the traditional industries will still give us larger orders. We have said that the new industries are more a decadal view that we are taking on. We already have forayed into the solar sector. We are working on the semiconductor as well as the hydrogen industries, which are more, I would say, more a 3 to 5 year kind of view. We will obviously look at pushing those orders, but these, though it may be smaller ticket orders, the quality of the order will be much better, the margins will be much better. And I think it also gives great references because of the advanced tech that gets employed. Over the next 3 to 5 years, as this market also develops, you will also see us having a better mix coming from the new industries or what we call as future energy solutions, whether it is solar, hydrogen, semiconductor, data centers, and of course also CBG as an adjacency. But the industries have also opened up. You've seen orders from IOCL, GAIL, BPCL that we have booked or we are following. So oil and gas has been our major mix. But yes, you rightly said, the new industries is something that we are pursuing, but that's more a decadal view rather than a very short-term 1-2 year view.
As a CFO, how are you utilizing cash in your books? Over 9,600 crores of cash, which is on a net basis lying in your books. How are you utilizing that?
I would certainly like to have 9,600 crores. So today I have 960 crores. That's also a big sum though. We are, of course, our capital allocation strategy has also been in the public. We share the profits earned through dividends. We also reinvest this cash into the capital projects that we are getting into, where we are taking minority stake. As you know, water is moving more into the performance model rather than merely a contractor model. So PPP projects will also have a share in the mix of revenues, and there a small equity for being a participant is required. Like we're building the municipal platform, we will also look at those investments. So a part of it will go into these investments. A part of it will be kept for the purpose of growth and working capital. And that's broadly our capital allocation strategy, Sajid.
Okay, Mr. Seetharaman, great to be speaking with you today. Thank you so much for your time.
Thank you very much.